Most people think AI trading bots are money machines. Set it, forget it, wake up rich. That's the fantasy. But here's the uncomfortable truth no one on YouTube likes to admit. Most beginners lose money not because AI doesn't work, but because they use it completely wrong. And if you're watching this right now, there is a high chance you're about to make the same mistakes, lest you understand what's really happening behind the screen. Before we dive in, if you want honest breakdowns about money, AI, and how the system really works, hit that subscribe button right now. This channel doesn't sell dreams. We explain reality. Let's start with the biggest mistake beginners make with AI trading bots, believing they're smarter than the market. AI is powerful, yes, but it's not magic. Most beginner traders treat AI like a crystal ball. They think once they turn it on, profits will magically appear. What they don't realize is that AI doesn't predict the future. It analyzes patterns from the past. And markets don't care about your past data when fear, greed, or breaking news hits. Beginners often download a bot, connect it to their exchange, choose the aggressive setting, and walk away. They assume the AI will figure it out. What they don't understand is that every AI model is trained on historical conditions. When market behavior changes, and it always does, the bot can start making decisions that made sense yesterday but are dangerous today. Another massive mistake is over-optimization. This one destroys more accounts than bad trades ever could. Beginners back to set their bot endlessly, tweaking settings until the chart looks perfect. Every dip avoided. Every peak captured. It looks like a money printing machine. But what they're really doing is training the bot to survive the past, not the future. Overfitting is like memorizing exam answers instead of understanding the subject. The moment the questions change, you fail. And markets change constantly. When real money is on the line, those perfect backtests collapse fast. Then there's blind trust in signals. Many new traders assume AI signals are smart by default. They don't question the logic. They don't understand the indicators. They don't even know why a trade was placed. They just see green arrows and think profit. That's dangerous. If you don't understand why a bot enters a trade, you won't know when it's wrong, and it will be wrong often. AI doesn't understand news, politics, war, inflation, announcements, or sudden fear. It only understands numbers. When the market reacts emotionally, bots can walk straight into disaster. Another common mistake is ignoring risk management entirely. This is the silent killer. Beginners often focus on win rate instead of survival. They'll say things like, "This bot wins 80% of trades," without asking how much it loses on the other 20%. One bad trade can wipe out weeks of gains if position sizing isn't controlled. Professional traders think in terms of risk first, reward second. Beginners do the opposite. They increase leverage, raise position size, and chase faster profits. AI doesn't protect you from that. It amplifies it. Then there's the illusion of automation. People love the idea of passive income. So they assume AI trading means zero effort. That's wrong. The best performing AI traders monitor their systems constantly. They adjust strategies. They pause bots during major news events. They know when to step in and when to step back. Automation doesn't remove responsibility. It multiplies it. Another massive mistake is trusting social media hype. TikTok, YouTube, and Instagram are full of AI trading gurus, showing luxury cars and screenshots of insane profits. What they don't show are the blown accounts, the failed strategies, or the affiliate links they're earning from your losses. Many of these bots are designed to make money for the platform, not for you. Some even trade against their users. Beginners rarely check this. They assume if it looks professional, it must be legit. Here's a hard truth. If someone really had a guaranteed AI money printer, they wouldn't be selling it for $49 a month. Another problem is misunderstanding market conditions. AI trading bots don't work equally in all environments. Some perform well in trending markets. Others need sideways movement. Beginners rarely know the difference. They turn on a trend-following bot during a choppy market and wonder why it keeps losing. Markets move in cycles. If your bot isn't built for the current phase, it will fail. Not because AI is bad, but because it's being misused. Then there's emotional interference. Ironically, even with AI, humans still sabotage trades. They panic when they see red. They stop the bot at the worst possible moment. So they manually close trades that were statistically correct, or they double down after a loss to make it back. At that point, the AI isn't trading. Your emotions are. Another critical mistake is not understanding fees. Every trade has a cost: exchange fees, slippage, spreads. Beginners often ignore this. High-frequency AI bots can look profitable on paper, but lose money in real life because fees eat everything. A strategy that makes 0.2% per trade can become unprofitable after costs. That's why professional firms obsess over execution quality. Beginners rarely even check it. Let's talk about data quality. AI is only as good as the data it's trained on. Many retail bots use low quality or delayed data. Some pull from unreliable sources. Others don't account for liquidity or order book depth. That means the AI is making decisions based on incomplete information. Imagine driving at 100 miles per hour while looking through a foggy windshield. That's what bad data does. Another big mistake is expecting consistency. Markets are inconsistent by nature. AI performance comes in waves. Beginners panic when the bot underperforms for a week or a month. They jump from strategy to strategy, never giving any system enough time to work. Consistency comes from discipline, not perfection. One of the most overlooked mistakes is ignoring psychology entirely. AI might be emotionless, but you're not. Watching real money fluctuate triggers fear, greed, and impatience. Beginners think using AI removes emotion. It doesn't. It just delays it. Eventually, emotion shows up in your decisions. That's why experienced traders build rules and follow them no matter how they feel. Another dangerous belief is that more data equals better results. More indicators, more settings, more complexity, all of this often makes performance worse. Simple systems tend to outperform complicated ones because they're more robust when conditions change. Complexity feels smart, but simplicity survives. And here's one mistake almost nobody talks about: using AI without a long-term plan. Why are you trading? Income, growth, capital preservation. Beginners rarely define this. Without a clear goal, every loss feels catastrophic and every win feels temporary. I should be a tool inside a broader financial strategy, not the strategy itself. Finally, the biggest mistake of all: expecting AI to replace learning. AI is a tool, not a teacher. If you don't understand markets, risk, and psychology, no bot will save you. The most successful traders use AI to enhance their decisions, not replace them. So here's the real takeaway. AI trading bots can be powerful. They can save time, remove bias, and execute faster than any human ever could. But they are not shortcuts to wealth. They are amplifiers of discipline or of mistakes. If you treat AI like a lottery ticket, it will empty your account. If you treat it like a professional tool, it can change how you trade forever. And if you want more honest breakdowns like this, no hype, no fake screenshots, no false promises, make sure you subscribe to this channel. We're here to help you think clearly in a world full of financial noise. 'Cause in the end, the real edge isn't AI. It's understanding how to use it without destroying yourself in the process.